Okay, folks, so a lot is going to be happening in the next 48 hours. And quite frankly, it's going to be quite violent. And while we don't condone violence at ZipTrader, the truth is, well, violence condones us. And no beating around the bush, we have to talk about 3 EV companies that are going to be reporting their deliveries tomorrow. We need to talk about a huge economic report that is coming out on Friday. We need to give an update on AMC, and we have to give an update on some of our other plays as well. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Also, quick announcement, I'm going to be taking a week vacation, and I'm going to be back on the channel on Wednesday, but we're not going to have any new videos until exactly 1 week from today. Truth be told, I'm flying to Florida tomorrow morning with my girlfriend, and let's just say that our relationship would go into a deep bear market if I decided to follow my usual work schedule. Hey, I know, I'm a hypocrite, right? I always talk about how diversification is so important. And you're thinking, why isn't Charlie diversifying? But the truth is that, she doesn't like that idea. To me, it's just portfolio management 101, but I guess that's not something that she believes in. But jokes aside, we will be coming back next Wednesday night, and I'm looking forward to seeing you there. And of course, we're also going to have our ZipTrader U morning briefings every single day as usual on the usual business schedule. Obviously, there's been a lot of big opportunities over the last few weeks, and we'll continue to keep showing up every single day, vacation or not, to try to keep helping you find those. It's just that for this week, it's solely going to be on the briefings, but we'll be back next week, don't worry. Okay, first, updates on AMC. So AMC has continued doing a whole lot of nothing. It started this trend by rotating between the 40s and 60s, and now it's consolidating even more, finding less movement between the highs and the lows. And just so you understand, this isn't supposed to happen with these plays. Most short squeeze candidates, they go up massively and then they go down massively, and that's it. You go home, you forget about it. Stocks that go up really quickly on euphoria, they come down really quickly as well. But ooga damn booga, this AMC story is quite frankly a different beast. The fact that people have not walked away in mass and taken their profits after such a huge rally really does go to show you how strong this ape movement is. And I think the truth is the retail is waking up to the fact that, hey, as long as AMC is holding at these prices, even if it doesn't move up another penny, every single day that goes by, the apes are winning and hedge funds are losing. Charlie, but how can apes be winning on days where AMC isn't moving? Think about it, most apes right now are sitting on huge gains and aren't paying anything to be in the position. Whereas most hedge funds right now are sitting on huge losses and they're paying every single day millions and millions of dollars to stay in the position because of margin fees. And they're probably using a lot of manpower trying to figure out how to get out of this every single day, running different simulations on different actions that they can take. And of course, when you have all these complicated transactions and then it's just met with ooga booga, it kind of screws up the whole process, don't it? But anyways, every single day that this stagnates is a huge win for retail, no question. It may not be as exciting as it was in early June, but the math and the reality of the situation is still extremely clear. And we can go on about the latest theories and the latest numbers like we usually do, but I think that wouldn't be doing it justice today. The truth is that it could certainly trade like this for a while, and that would still be a win. And so the only thing that I could say about this that really does it justice is that, hey, hedge funds do have to cover eventually. Okay, next, CCIV. So on Monday's video, we went into the whole spiel on how CCIV is in its later stage opportunity up to the merger, and that the merger vote is going to be taking place on July 22nd. I said on Monday that my price target on CCIV is $45, but I also think it's going to be a slow burn. It just so happened that the only thing that was slow today was people pushing the sell button because all those buyers just stampeded over them with that 10% rally. But there's really a few factors that go into this. Number one, the floodgates have opened for growth stocks and a lot of big money is starting to back them again because they are the only stocks really that aren't all the way up at all-time highs. Number two, EVs especially are very hot right now. Number three, CCIV is enjoying a lot of positive coverage ahead of its merger vote on the 22nd. Evercore ISI, an investment banking advisory firm, went and looked at Lucid's flagship New York studio and test drove the coming model. They said they were very impressito, and pointed to their increased reservations and prototype line. They went ahead and previewed the car and said that they believe the sedan's powertrain holds its own versus Tesla models, which is quite the bold statement. But cutting out the fat for a minute, what do we know about Lucid going into this merger vote? Well, number one, we know that Lucid is planning on a fall production and delivery rollout, still holding to an estimate of about 577 vehicles to be delivered in year 2021. In 2022, the goal is to produce and deliver 20,000 vehicles. We know that Lucid has been building out production facilities in Arizona and is already running pre-production models. We know that the company has continuously invested into opening more retail stores and hiring more employees in the US, the Middle East, and Europe. And we know that the vehicle that it's bringing to the market has some pretty damn competitive specs when stacked up against the rest of the lot. What we don't know and what we kind of touched on Monday is that we really don't know if they're going to be able to meet their production goals. They've already delayed it once, and I'm sure that it's going to have more hiccups. And in the words of the Musk man, achieving scale leads to production hell. And honestly, we had some pushback from folks saying, hey, Charlie, you're spreading some FUD around the CCIV situation. We don't even know for a fact that CCIV is going to have more hiccups. But hey, I watched Tesla struggle for years trying to achieve their production goals, and I'd argue that they're still kind of struggling in some ways. Lucid is barely out of the womb, folks, so you want to make sure that, hey, yeah, we like the company, we like what they're offering, we like the leadership, and we like the potential, but we're not so stupid as to assume that everything's going to go according to plan. You can't mindlessly buy something and dismiss all the bad things as FUD just because you don't like them. You have fear, uncertainty, and doubt. Maybe you don't need to have fear, but sometimes you can have uncertainty and doubt. I have uncertainty and doubt over whether Lucid is going to be able to achieve their production goals this year and next year. I think they're going to hit at least a fraction of it, and I think that's enough to qualify Lucid for a higher target price. But one of the reasons that I've been fairly tempered is because I don't know exactly how long it's going to take for them to achieve their scale production that they've been projecting. I think that they're not going to actually have any problems with demand side. The demand side of this, I think it's going to be fine. But the production side is going to be hard. It's going to probably take a few years to really get on track here. For them to deliver 20,000 models in the second year, on the road, that's going to be a huge feat. But even if they can do half of that, and then in the upcoming years after that, they really start scaling up, that'd be fine, right? That would still qualify Lucid for a much higher valuation. So I would say, hey, I'm very patient with Lucid. I am also bullish on Lucid, but at the end of the day, I want to make sure that we're tempered here. I want to make sure that we're not naive to the fact that this is a very difficult industry, and they have a lot going for them, but they're still just barely out of the womb. You're betting on a baby. Hey, the baby has a lot of potential. It has some great and maybe very wealthy parents because of all this financing. But at the end of the day, it could turn out bad, right? So you have to make sure that you're tempered. Okay, next. So the big catalyst happening tomorrow is that NIO, XPEV, and Lee are going to be reporting deliveries. NIO has had some pre-anticipatory running today, capping off a beautiful few weeks. And let's be real, we've been expecting a healthy report for quite some time. But has NIO already factored that in already? I mean, NIO is not really that much down from February highs, and another couple of weeks of trading like this, and NIO is going to be back to those prices. It certainly turned itself back into a momentum play fairly quickly. I'm a huge fan of NIO, and I've even been shocked at how fast this has turned around. Obviously, a big reason that it had the opportunity in the first place to recover this much was specifically because it got beat down so ridiculously over some stupid medium-term setbacks. But it's starting to get borderline euphoric, and in terms of projections, what I would say is, hey, if we beat on deliveries, if we really beat on deliveries, I wouldn't be surprised if this really goes euphoric. But if NIO just meets expectations, or even worse, fails on expectations, I would expect this to get beat down. Look, folks, everything on this chart suggests that without the presence of euphoria, it would be having a very healthy pushback right now. I mean, you look at XPEV, for example, it's had a very nice pushback on its uptrend, and if you look at a lot of the other stocks in the growth sector, they've had many different days where they at least breathed. They took a breath. With NIO, it hasn't taken a breath in several different days, and that's because people are really hyped about these delivery numbers. So my take is that if it doesn't really beat on these delivery numbers, the euphoria is not going to continue, and then you're going to get some of that healthy pushback. But at the end of the day, it's a short-term pushback because I think that NIO is set to go back to all-time highs. I think the bigger picture is a lot of people are waking up to the fact that, hey, overall, growth is on a very, very strong uptrend right now, and a lot of these EV companies especially are in their last couple months maybe of being so far below all-time highs. A lot of the people that panic sold these and were gone are like, okay, wait, I'm losing my last chances to get here at a good price. But I think that what's so beautiful about a retail community here is that so many of us bought the dip during the last couple of months when all the media was telling us to sell it. So many of us took advantage of these opportunities. So we're like, okay, great, I love that it's recovering fast, but I don't really care if it recovers tomorrow or 3 months from now. I know this is a great play. I'm going to keep waiting and waiting until it hits my price target. And once it hits my price target, hey, I might even upgrade it because this is doing well. Let's see how they're doing on deliveries. Let's see how they're meeting demand. Let's see how they're delivering value. And XPEV and Lee, same thing. They also have a lot to prove. These have done very, very well over the last month, and a short-term pushback isn't going to hurt anybody. It's in fact a great opportunity for folks who weren't able to get in on the ground floors of this. Lastly, the final big catalyst is Friday. Now, the market has backed off of inflation concerns over the last month. Despite rising prices, more and more of Wall Street is trusting the Fed's prediction that inflation growth rate increases will be transitory indeed. And we've seen some nice downward pressure in certain commodities like lumber, which is down more than 40% in June. We've seen the real estate market cool off a bit. Some of the other major economies that handled the pandemic in the same way as us are seeing inflation cool off in a major way. And so far in the US, we've had a somewhat choppy job market recovery. A lot of employees don't want to get back to work, and a lot of employers don't want to pay higher wages, which is creating this condition where you're sort of in the middle ground, where eventually employers are going to have to pay a ton more money in order to get workers back in, and that's definitely going to have an impact on the prices of our goods and services, as well as the employment numbers. But at the same time, we still haven't really seen that yet. And I don't think that we're going to see it this week either. And while the market hasn't been as on edge as it used to be with these reports, the truth is that this is going to have a huge impact because we're going to know exactly how the economy is doing. We're going to know exactly what the inflation picture is going to look like. A healthy report these days is probably going to associate with much of the same. Little bit of a healthy uptrend in the Dow and the S&P, and the NASDAQ and tech plays catching up. Bad jobs report is probably going to result in the Dow and the S&P doing really bad, and the tech continuing to go up. But a very, very good jobs report, something that really beats expectations, could cause what none of us want to see happen, is the inflation trade start coming back and people start panicking again with tech selling off and growth having another correction. So we're definitely in a sensitive situation here. You want a healthy jobs report. You don't want something that's so crazy that inflation's getting out of control and people are worrying again. And you don't want something that's really bad that's going to kill the S&P and the Dow. You want something that's right in the middle that keeps this healthy market that we have right here. So certainly a delicate picture, and we'll see what happens. Anyways, folks, that caps off the video. Have a great 4th of July weekend, and I'll see you next week on Wednesday. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. And of course, quick plug, if you'd like to learn how to trade, would like access to our private chat and daily morning briefings where we brief on all the biggest catalysts each and every morning, well, I'll go ahead and put a link to ZipTrader U below. But folks, please only join us if you're going to commit yourself to the process. Practicing paper trading with every single concept and then never giving up when times get tough. The program was thoughtfully created to give you a process to learn and grow, but if you don't complete the structure and dedicate yourself to doing every single lesson and doing it as and completing it as designed, then you're not going to get anywhere. When I buy something, I make sure that I'm going to get my money's worth out of it. So I expect you to do the same. And if you'd like to take the leap and join us, I'll go ahead and put a coupon code in the description below. Battlefield75 will get you $75 off before checkout. You just put it in the little add coupon code spot before checkout. And if you're wondering what broker to trade these stocks on, we always like to send new traders over to Webull. I'll put a link to them below as well. And signing up and depositing with the link below will also get you some free stocks. Anyways, have a great day, and I'll see you in the next video.